Welcome back, guys. In this video, I'm going to be explaining and breaking down every step you need to take a trade. All right, so this is just the simple version of how you can take a trade. And yeah, let's get straight to it. So right here, we're on gold, right? So as you can see, we were going sideways for a bit. So if you want to know more about the trend, you can watch my introduction to technical analysis right here on YouTube, or if you're on a school platform, you can watch over here that I have broken down also everything you need to know about the trend. All right, so we were going sideways for a little bit, and once you're just going sideways, you basically have to wait, right? Wait for the break either to the upside or to the downside. All right, so that's not, it sounds simple, but it's actually you need a little bit more than that, right? So first you start with the analysis, right? This is all you need to take a trade, and you start with the analysis. So where are you right now in the market, right? So I'm inside this range, so what do I have to do? Do I go for longs? Do I go for longs? Do I go for shorts? No, I just wait, right? Wait for some sort of basically confirmation, which will be my next step for your trade to play out. All right, so I just hit the play button, and we're just gonna wait now for some sort of confirmation. So we're coming down, right? Hold up, right? So we have the moving average over here. You see this blue line? Let me zoom in. So we have the moving average over here, and we right now we're trading above the moving average. As you can see, we're above the moving average, and we just had this green candle over here just basically closing right on these levels of wick, right? So these are wick. Wick means there's rejection areas, right? And we just closed above this level of rejection. Now, if we pay close attention to this, if we close above this range over here and we're going bullish, most probably we're going bullish on the next candle as well, right? So this is what happens. So once we close above this level over here on the left, this range, we basically had enough momentum and enough volatility to push up. So we just kept pushing up. Now again, we're still kind of in a dangerous area, because if we look left here, we have a bunch of rejections. So we now need this move to continue pushing up, and then we're gonna like have a better confirmation for basically a trade, right? So we need some sort of candle to break and close above this level of resistance if we're pushing up. All right, so let me hit the play button again, and then let's wait. All right, next candle pushes down. Bam. So we have now one more confirmation that we are coming up. So this 2 a.m. candle closed above this level of resistance, which means that we now can basically not look at resistance at this level of resistance anymore. We basically have to, basically two options. Again, keep pushing up, or from this level, we'll just push down. It was just a fake out, like right over here. This was a fake out. So most people thought that price was pushing up, and the next candle we were going to push up again, but we didn't, and we just pushed back down all the way to where we started. So we started this move over here, basically ended over here because this was a fake out, and then we pushed back down to this area. So right now we just closed above all of these on the left. So this could be either a push up again or a fake out, and then we would end up right here where we started. All right, so I'm gonna hit the play button, and now we're still in between these two steps, right? The analysis and the confirmations. Next candle, pushes up, pushes down. Beautiful. So now we just made a new high, right? Since we just made a new high, are you going to enter a trade on the high? Not really. It doesn't make sense, right? Because you have to wait for price to push down and then you enter at a low. So right now we know, hold up. Right now, this is the low of the candle, right? So this is the high of the candle. This is the low of the candle. So you want to buy somewhere around this area over here for a better, or at least that a trade that you have a higher probability of being successful and making more profits, instead of buying here and then having a short and a bigger stop loss and a short take profit, right? So this is where you start to look for step number 3 over here, right? The entry. So if you start to analyze, have the confirmation, and then you start to pay attention to where your entry should be, which is over here, right? Now we just wait for price to come down to this area and enter for a position. So let me hit the play button again one more time. All right, keep it going. Push down. Bam, rejection. Great. So we had this push down, right? So we now made a new low, right? And then we now made a new high from these candles, right? So now I know that this is the candle, the new low, this is the previous low, and this is the new high. So now I know that we have basically this range to take a trade and this level over here to break past and hit our next target, which would be again step number 4 and 5. They come together, right? So if I were to take a trade, let's say this is the lowest you could go to take a trade, but let's just say if we entered a position, which what I did was 23.45 right over here, my stops would be below this previous low. And if price was coming down here and basically coming with like strong like volatility, but not that much volatility, I would move my stops to underneath here. But right now, let's just keep it at 3 points over here, and my target is already over here at 23.55. All right, and this is the reason why. We look left and we have clean traffic from here to here, and coming down we have clean traffic from here to here. So basically this is where I want to stop at, right? If I extend this to the left, right? All right, now let me hit the play button again one more time. Boom, price pushes down. Look where it pushes down to, almost at this low, right? So now we know that, price just came down. It probably collected some more buy orders, took out some other traders, right? And now we just wait for the push up. Boom, there you have it. So this was the 8 a.m. candle. We had news at 8:15 and 8:30, and now we just had 9:30 market open. So this is how I was able to make 5% combined with gold and US30, and then now break down US30 trade, right? So this was gold. So very, very simple. Price just broke this previous highs, came over. It came at around 8, I think 8 something, right? If we go down to 15, at around 8:30. So 8:30 to 8:45, price just hit my take profit, and I was out for my trade. And this right here, gold is just pushing up again. All right, so now we know all of these confirmations. So if we go down to US30, you see that is again the same thing. We were sitting around over here. This was 6. We have a doji. So this is a doji candle. A doji candle, which you go like this. This is the wick, and then the body is right over here, and this should be colored. And we know that this part of the body over here, as you can see, is bigger. The top part is bigger than the bottom part, which means sellers are in control. So price is just pushing down, right? Usually this works for a reversal candle as well, just like it did over here. Price was pushing up, used at a doji as a reversal candle, and then price just pushed down. All right, so I enter for a short right at 7. Short position right at 7. It was underneath the previous candle low, and my stop was right over here. I'll leave it over here. And then I exited right when we were just approaching this moving average. And the same reason I exited this trade is because I don't believe that if we can push below the moving average and trade it like we were doing over here, trading below the moving average. But since we are like on a high over here, yes, you can enter for a sell on the high, but if the moving average is low, I'd rather be out, because this is what it does. It'll just push price up, right? The moving average will stick to its direction, and if we're trading below it, then you have a better confirmation. If the moving average was coming over here and making this, and this was the sell, my sell entry, and the moving average was above the price action, I would have entered for double the size of my position, and I waited for a touch right here on the bottom again. All right, so since the moving average was below price action was right over here, and the moving average was coming down here, I said, no, let me get out right over here. And so that's what I did, right? So I am down. Also, I am done, for today for my trades, and those were both of my positions. All right, so this was the analysis. Again, waited for price to come over here. I know that if we look left, this is a rejection zone, and rejection zone over here too. And confirmations, my doji candle, my stop loss was above, so my stop loss was right above this high over here, and my take profit again was right at the moving average, or this high over here. This is what I exited. Got around, I think, 40 30 points. So it was not maybe like a C, maybe C or D trade. Wasn't that good, and that's why I exited. I wasn't feeling like this was gonna go my way. So I already had also my gold position, so this was already good for me. So this was my US30 trade too. If you like this video, make sure you comment down below what you want to see next, and I'll see you on the next one.